What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at SoundHound AI stock, ticker symbol SOUN, on a variety of time frames in anticipation of the next trading day, Friday, March 1st. Alright guys, so SoundHound AI stock here just reported earnings. They had a little bit of a miss here. They reported an EPS of minus 7 cents per share, so a loss of 7 cents per share. The expectation was approximately a loss of 6 cents per share. The expected revenue was 17.75 million, and they reported 17.1 million. So they did miss on both EPS and revenue. The stock was up $1.08 today, 17.03%. It's now down approximately 19% as of the recording of this video in the after hours. If we take a look at, because you guys know, if you've ever watched this channel before, if you haven't, if you're new here, please subscribe to the channel. I greatly appreciate it. My goal is to hit 3,000 by the end of this week, and I guess that's tomorrow now, so not going to happen without your guys' help, so I appreciate you jumping on board if you have not done so yet. But those of you who have been watching the channel for any length of time, you'll hear me say a lot, right? That after hours movement, it typically has to be taken with a grain of salt because of volume. However, we did get quite a bit of volume, of course, because we had the catalyst, the earnings report. Though, to be fair, the volume did substantially die off with the stock right around 650, and this fade has come on much lower volume from 650 down to about 6, so that is also worth considering. Even though this is on higher volume, making it, you know, what a lot of people would see as a slightly more definitive move here, the real test is always going to be the open the next day, but it's important to consider volume with big after hours moves. So we'll see where this thing opens tomorrow morning, but let's move on here with our daily ritual and take a look at the volume profile on the 5-minute chart here. We have to include after hours in this now, but you guys know what I'm always looking for, right? We're typically looking for big changes in volume, and I want to see it correlate with a particular stock price. If I'm bullish, I'd prefer to see as much volume as possible to the upside and as little as possible to the downside, and, you know, vice versa. If I'm bearish, as much to the downside as possible and tiny little volume on bounces. Okay, so if I'm looking here, what's actually really interesting is if we look midday, we got this pop, right? And volume increased substantially on that pop, which leads me to believe that at that time, a much bigger sample size of the market agreed that the stock belonged not below $7, but up toward about $7.40, $7.50, which is worth considering. But now, of course, we have new information with the earnings report. And if we look at the volume profile here, we initially had, you know, a little bit lower volume actually. And then once the earnings really took hold, we did get rising volume on these red candles. And you can see the volume kind of sloped off. It faded off once we entered this period of consolidation, which is really interesting to me because it leads me to believe that, okay, perhaps the largest sample size of the market after hours kind of agreed that perhaps, you know, SoundHound stock belongs somewhere around 650, 640. And this fade here, though, again, it's happening on much lower volume. So that fade from 650 down to 6, I'm going to have to see where this thing opens tomorrow. And truthfully, that goes for this bigger volume on the move as well, because, I mean, realistically, guys, yeah, we're looking at, you know, 5 million shares of volume on the biggest candle, but at that time, it was, what, I mean, a $657 stock. So the volume gets beefed up quickly. We're not talking about a $600 stock with 5 million shares of volume. We're talking about a $7 stock. It changes things quite a bit. And we are likely to see new traders, like traders that haven't really ever given SoundHound stock the time of day prior, trading this tomorrow, because it's going to be a first day stock, the first full trading day after a big catalyst, of course, earnings with a big move. You're going to see a lot of traders trading this here tomorrow, and I think they're going to come in and shake things up a little bit. We'll have to see how the trend develops early in pre-market and then through the open, really like the first half hour of the day. But just understand that as well. If you see some crazy moves tomorrow and kind of like the first half of the day, understand there's going to be a lot of traders trading this because it's likely to be an in-play first day stock tomorrow for active traders to kind of utilize. And the truth is, typically, that's going to end up being a good thing if the trend develops in your favor, which of course remains to be seen. But let's take a look now. Let's move on to the 30-minute chart and start looking at our day-to-day levels that I'm going to be paying extremely close attention to here tomorrow. So After hours, we did give up that 50-period moving average. However, we, of course, did hold it into the close. But we have now given it up since volume is a little bit higher. I'm looking at this stock as now kind of in between that channel here on the 30-minute, between the, of course, ever so popular self-fulfilling prophecy moving averages, the most popular ones that anyone is going to put on their chart. Everyone makes decisions around these levels, leading them to be relatively effective, right? The 200-period and the 50-period moving average. We actually trended below. We treated that 50-period as kind of a level of resistance in the after hours. But again, it was during fading volume. So I think that remains to be seen. But tomorrow, I'm going to be watching this. If I'm a bull heading into tomorrow, listen, any downside test of this 200-period, which, by the way, I do like that it's trending upside rather than downside and kind of descending away from the stock price. But the truth is, any test of that 200-period, which we might find it around, we're at 540 right now. We might see that at 550, 555 come tomorrow's open. Any test, we're going to want to see that hold and bounce away to the upside on as much volume as possible. Get a big sample size agreeing with your sentiment. But I mean, truthfully, guys, the Bulls' goal tomorrow, the primary objective, I would love to see a reclaim of that 50-period, specific to the 30-minute chart, right? That's the primary goal specific to the 30-minute. We're always looking at multiple time frames. I think trading off of one time frame is an incredibly irresponsible and lazy way to trade, yet so many people are guilty of it. But a reclaim of that 50-period, that white line here on the 30-minute in particular, essentially wipes us clean as far as after hours is concerned. Yeah, I mean, we did close up at 742, but this basically resets us to Wednesday if we were to see that occur. So that's really the primary objective. Bears, any test, of course, of the upside, the 50-period, you want to see a hard rejection on as much volume as possible. And bears, we talked about the Bulls' ultimate goal tomorrow. Bears, your ultimate goal is a high volume downside break through the 200-period moving average here on the 30-minute chart. Let's move on now to the 4-hour. And you can see here that SoundHound has had a heck of a move pulling away. And these moving averages, they're going to take their time on the 4-hour chart. Now, bulls, I mean, listen, obviously, if we were to test the 50-period on the 4-hour, you would obviously want to see that hold as kind of a last resort support here. But the truth is, I mean, that is a substantial move. And after this earnings report, that would be a massive continuation of another 20.5% to the downside. So the truth is, as a bull, the primary goal on the 4-hour is just to see that 50-period just continue upside, ideally get up above 5 to strengthen that level, and ideally, of course, not see a test of that 50-period. Allow, once the volume comes in off the open, allow the market to kind of deem that unnecessary, at least as far as the 4-hour chart is concerned, and start curling up above, getting kind of like a phantom bounce going off of just what many would call thin air here on the 4-hour. But listen, bears, here on the 4-hour, as that 50-period comes up toward 5, I mean, I think a lot of bears are looking at that $5 region and kind of salivating, thinking, okay, if we can get below 5, I think this thing will really accelerate downside. It'll discourage a lot of bulls. I think that's what the bear psychology is probably looking like right now. And you have to understand, as a bull, it's great to just sit around and talk about the bull thesis, but I would argue it's more important to understand the psychology of the enemy, so to speak. And it helps you understand your own trade that much better. Sure, it's uncomfy, but I mean, do you want to be a trader or not? So I really think that's kind of the psychology here of the 4-hour. Now, the daily chart is always going to be the most crucial. In this case, of course, the daily is not going to show after hours movement. So the stock is down right around 6 right now. So the daily is the most obvious, I think, because you have the most eyeballs on it. And I say this a lot when covering other tickers. It's really important to look at the daily and decide, okay, I understand the shorter time frames now, at least the most popular ones. When I'm looking at this, what is the obvious picture? If I showed the daily chart to anyone on the street who sort of understood how stock candles look, what would they tell me is the most important level? Because, that's the level I want to watch. There's no reason to overcomplicate this, because if TA is all a self-fulfilling prophecy, which is my belief, by the way, overcomplicating it just makes my thesis less effective. I just want what the most eyeballs are on. I don't care about anything else. That's why I'm looking at moving averages, which they're not magic. They're just heavily watched. And listen, to me, again, think about the stock's currently at about 6 after hours. The most obvious thing here on the daily is going to be the round numbers. For me, I want to see $6 a share hold, ideally. If it breaks, 550s probably going to be less psychologically strong than 5. 5 is one of the biggest levels on this chart right now. Ideally, I wouldn't want to see it testify, but if we do, again, understand, bulls, the bears are looking to snap that as hard as possible, so you'd want to see that hold. Ideally, we don't get that far, and ideally, we just hold 6. Okay? Get a bounce potentially tomorrow, and if 6 can hold, a beautiful scenario for bulls would be to make our way up through 650, get that little psychological level out of the way, because of course, each $0.50 is going to be somewhat relevant on these lower price stocks, and get an open sky up to 7. Okay? In the more midterm, I think 8 is a huge goal if you own SOUN, and I'm sure some bulls have their eyes set on 8, if not heading up toward $10 a share, right? Because 10 would be a major psychological level. But first things first here, hold 6 if you're a bull. That's your number one concern when you wake up tomorrow and check the market, and of course hold it throughout the day, right into the close at least. And if you're a bear, number one objective tomorrow is to snap downside 6. Head down toward 5. Bulls, hold 6, bounce, get up through 650, ideally on a lot of volume to prove that there's a bigger sample size that agrees it belongs higher, head up towards 7. Okay? But I think this is really all going to pivot on 6, and we're likely to see quite a bit of volume roll in if we are seeing the stock kind of hovering around 6 still at open tomorrow. Okay? Implied volatility. This is important to track. Understand it is a little bit high right now, so that is going to... it's going to present a slightly higher risk of IV crush. Understand, it's at 248, 249% after earnings. It will not surprise me at all if we're covering this stock tomorrow. Let me know in the comment section if you guys would like me to continue covering this one. That feedback is tremendously helpful, by the way. It will not surprise me at all if implied volatility tanks off. Okay, that is what IV crush is when you own options, because the options traders, they price in additional expected volatility heading into a catalyst, like earnings is a very common one, right? And then after the event is over, there's no reason to price in that volatility anymore. There's no reason to expect that kind of volatility anymore. So I would say probably around 80% of the time after earnings, IV falls. So that is a negative impact on contracts that have been purchased, both calls and puts, by the way. So that can put you in a position where you make a little bit less money if you are directionally correct, or you lose a little bit more money if you're directionally wrong, because when IV comes down, it sucks a little bit more value out of those contracts on top of, the other Greeks, the delta, the theta decay. But I mean, that's always the risk with buying options heading into earnings. The reason one might hold options that were purchased heading into earnings is because they think they can outrun any potential IV crush, which is of course always a possibility. So let's take a look now. What was the options bias heading into earnings? Now this was heading into earnings, okay? Because this was all from today. So let's see what happened here. We had 403,000 total contracts traded. That's a pretty good sample size. About 270,000 calls compared to about 134,000 puts. We saw double the call side bias compared to the put side bias here today. But those of you that plan to hold this for longer than just an earnings play, pay attention to this, because this is actually very, very interesting. The 0 to 20 delta range, those are the short-dated, gambly style calls and puts. It was leaning heavily to the put side. Okay, so the short-term speculators were betting bearish on earnings, but again, those of you who are looking to hold this thing for a bit longer, as you get to at the money and then in the money and deep in the money, look at how it leans extremely heavily to the call side. So the options traders here today, again, this is real data. There's no opinion here. This is just what the traders are telling us today. They were leaning bearish on average in the very short term, but the longer term you get, again, because on average the expirations increase in length when you go up in delta value, the longer on average expiration that you get, the more and more call side bias is present. So to make this simple, the options traders in the very short term were bearish, in the midterm starting to lean bullish, and in the longer term, they were extremely bullish, at least here today. Listen, if you got value out of this video here, please subscribe to the channel. Happy to have you. And by the way, we just added a new benefit to all of the memberships, Gold, Gold Plus UOA, and Platinum. I'm now alerting in-play stocks as they come into play. These are the stocks that have elevated relative volume, typically a fresh news catalyst, and the proper market cap, bid-ask spread, things like that. And these are the stocks that for a short period of time, they demand the attention of essentially most momentum traders across the world, because I think, most momentum traders, we typically end up all kind of looking for the same thing because we all kind of realize that that same category has the most edge. So what happens is you get all these traders. I don't even know how many. Lots, obviously, right? Around the world setting expensive scanners. The scanners, they're not cheap, right? I pay quite a bit a month for the scanners, quite a bit per month. For the same thing. All the scanners are kind of set looking for the same thing. So what happens is these stocks start to move off a fresh news catalyst, right? And I'm curious, I wonder if SoundHound will actually be on that list tomorrow. We'll see. And those stocks, they hit all the scanners across the world, and it becomes like the popular piece of equipment on the playground for anywhere from a few minutes to a few hours, and then the interest fades and everyone moves on to the next thing. It's really an interesting phenomenon. It happens every day. Now, understand though, if these stocks are traded without proper risk management, and if you're too slow, you don't know what you're doing, they're very risky. But, we're scalpers, right? The name of the game. Speed, skill, and discipline. If you think you can take the heat, and you think you can manage your risk like an adult, maybe I'll see you inside. Take a look at that link in the pinned comment. Appreciate you guys, and I'll see you in the next one.